This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the JDfn Forex Report.
Good afternoon, this is David Petrunik with the Forex Report. Today, the euro-dollar outwitted many traders as prices again tested the highs but were reluctant to break out higher as prices then chased the lows. Today's Asian session started off in a mode of stability as prices maintained their fragile levels and just drifted higher to test the highs. The euro session reversed the Asian session's upward drift, but prices ironically held the fragile-looking level that the Asian session's bounce started from. As we merged into the U.S. session, prices held the fragile level as they struggled higher and were able to test the highs once more before stocks were opened for trading. Once the highs were tested and failed to continue higher, the lows were prime suspect for a retest as the surviving fragile support level of 45.76 was finally plowed through. This got the bears excited as it looked like prices should continue lower to test deeper support levels. Just as the bulls were rejected their breakout just before the stock market opened, the bears were also rejected as the pair maintained its tight range throughout the day. As we have been closely tracking the euro-dollar, we have noted on multiple occasions that a break of the daily highs or lows would induce a strong breakout. We got that breakout this week as prices made their biggest push of 300 pips through Wednesday. From Thursday to Friday, prices were making new highs, but the patterns were consolidative in their nature and thus only took prices 40 pips above Wednesday's highs. As we reviewed the wave patterns during today's 1 p.m. radio show, I noticed that the euro-dollar was most likely at the end of a wave 3 series, yet still had room to further extend its current move up. In other words, the pair looked to be topping and was setting up for a significant reversal as prices could still retest the highs once more as our anticipated extension targets of 46.80 has still not been hit. The big news for the week would have to be the dollar-yen as the pair almost lost 500 pips. A 500 pip move in this pair is more significant than on a pair like the euro-dollar or the pound-dollar. The 90 level in the pair has been noted as significant and was nearly tested today. Since both the yen and the dollar are considered the safer currencies in times of crisis, it is profound to have seen the dollar get taken down by the low-yielding yen. At the same time, the higher-yielding currencies like the euro took the dollar down as well. To see this trend continue much further would be a trend reversal of global consequence, as the trend could eventually eliminate trading with Japan. If the yen were to continue gaining against the dollar, Japan would have less profit opportunity with the U.S. as Japanese products would be considerably more expensive than competing country products. Gold also confirmed this week's dollar weakness as prices broke 1,000. We are doubtful that the dollar will lose too much more value as this would kill global trade. The markets have to expand and contract, yet they need to stay balanced overall or they will fail. Currently, the risk lies in deflation, so the Fed is printing dollars to keep the dollar weak. But the Fed does not want the dollar too weak, so it is a balancing act until someone or something slips. We think the slip will most likely induce deflation, while inflation is being controlled and managed for overall balance and is not as subject for a slip. Thanks for tuning in and have a great weekend.